Indian airlines are flying through a lot of turbulence. This despite India being the fastest growing aviation market in the world. Rising crude prices, cutthroat competition and technical snags are just some of the factors weighing in on the sector. So is the government's support and thrust on better air connectivity enough incentive for the aviation sector, or is it time for the Indian aviation sector to course correct? Let's pose these questions to Kinjal Shah of ICRA and Mayur Milak of IndiaNivesh Securities, both of them joining us this morning. Good morning to both of you, Mayur as well as Kinjal. Kinjal, let me start off with you. A lot of issues right now for the sector as a whole. Individual stocks, I mean, while Interglobe is now sort of coming out of the issues that it had earlier on faced, what is the structure of the industry looking like at this point?
See, this year has been a very bad time for the industry. There have been twin blows of the increase in ATF prices as well as the rupee depreciation, which has impacted the financials of the airlines. So overall, if you see average FY19, the ATF prices were higher by around 25%. Till November, I think they were higher by around 35% on a YOY basis. December, Jan, Feb, they saw some respite in aviation price, ATF prices. Again, March prices have risen on a month-on-month basis. So obviously that increase of around 25% on an average in ATF price, which constitutes around 30 to 40% of the total cost of airlines, and at the same time the airlines not having the pricing power to increase the yields, that obviously doesn't bode well for the industry, because there is a lot of competition in the industry, there is high capacity. PLFs are averaging around 85%. However, passenger growth has declined in the current year. Jan numbers were in single digits. So that has not helped the industry, and since because of the competition, the pricing power of the industry is very low, they are not able to improve the yields. So in such a scenario of increasing costs, and if they are not able to improve the yields, where will they get the funds to fly?
So 9.5% passenger traffic growth in the month of January was, I think, a 53-month low that we saw. Is that expected to pick up according to your calculations?
See, on an average, our estimates say that the growth should be around, on a medium-term CAGR basis, the passenger growth should be around 13 to 14%. So usually it tracks the GDP around 1.5 to 2 times the GDP is the passenger traffic growth that we would expect. Indian aviation industry has seen a higher growth of around 23-22% each in FY16, FY17. That was due to the economic developments, India's thrust on tourism development, the e-visa schemes coming in, increase in the number of foreign tourist arrivals. So that has helped, but on an average in the medium term, we expect that it should stabilize around 13 to 14%.
You know, in your outlook, Kinjal, good morning, of course, you are saying that amongst other things, the domestic airline industry needs an equity infusion of what, 35,000 crores over the next 3 to 4 years. My question is, who gets this? I mean, one, the obvious name could be Jet Airways. If a deal happens and there is some fund infusion, there needs to come in. But there's a handful of airlines. I don't think Air India, for whatever efforts that the government is trying, is getting any kind of equity infusion. 35,000 crores over the next 3 years for the other 3 airlines seems a fairly fat sum.
So yeah, I mean, it's a combination. I mean, it could be equity, it could be debt, it could be by way of internal accruals. So if the profitability of the airlines improve and they are able to generate that kind of funds, that could be sufficient. So we
you think that will happen?
It can happen only if the fuel prices were to, say, decline from the current levels, or even if they stabilize at the current levels, if the pricing power of the airlines increase. That is very important for the industry. They should have the ability to increase the yields and fares. So from Q3 FY19 onwards, we have seen that airlines have taken an increase. Obviously, one is to pass on the increase in the cost that has happened, and obviously because of the decline in the capacity that we are seeing because of the issues with some of the airlines. So Q3 FY19 has seen an increase in fares, and that continues in Q4 as well. So at least Q4 we feel that they should come from the lows of the Q2 and Q3s that we have seen in terms of profitability. So going forward, if the pricing power improves, then definitely there could be improvement in internal accruals. But at this time, we feel that the outlook for the industry remains negative. We do not expect any significant improvement, at least over the next 1 year.
Mayur, weigh in on this. Are you also more negative with regards to the industry pickup? And according to you, at this juncture, for most of the aviation players, is it more important to make sure that more number of seats get filled, or returns per seat should remain the focus for most of these aviation players?
Yeah, hi. First of all, I think I don't agree with the negative outlook. I think while yes, there has been turbulence in the temporary phase, we've known that yes, Indigo is struggling with the pilot availabilities. SpiceJet could or could not, struggle with what happens to Boeing Max, and Jet has its own set of problems. Yes. And we know that yes, Air India is really not going to add anything. So yes, I think player-wise, everybody has their own set of problems at this point in time. But I think if you look at the whole scenario around, you've seen yields remain so strong. I don't remember the last time in Q4 in the last 3-4 years that we'd seen such strong yields, clearly indicating that despite the passenger growth really coming down to a single-digit number, they've been able to really command a kind of price because of supply disruptions. I think clearly a case where they will be making much higher EBITDA. I wouldn't be surprised if the Q4 EBITDA is actually higher than Q3, which has never been the case in history so far. So I'd actually have a positive outlook. What I really need to see is which of these guys really turns around the first to take the biggest advantage of this scenario.
Okay. Mayur, for the one factor that is working for the industry is the continuous growth in passenger traffic. I mean, you could argue that there might be blips here and there, but by and large that stays okay. Despite all of that, there is a continuous inability to improve the yields, blame it on ticket prices or otherwise. Crude, of course, is unpredictable, so we can't really factor that much on that. And airport infrastructure remains a clear bottleneck. Unless that's cleared, that continues to remain a challenge too. What's the linear growth rates that you are factoring in, keeping in mind all of these challenges for the next 2 or 3 years?
See, I think yes, you're right. The infrastructure is a challenge. So I think we know, we are really not building a kind of 20-25% kind of growth where you get to see disappointments. I think actually looking at a 10-12% kind of passenger growth with the kind of base that we are now sitting on is pretty decent. I don't see a reason why the industry could not grow at a 10-12% kind of passenger growth. Looking at the kind of regional connectivity with every scheme that is really being added on. And these guys have actually, so if you really see how the industry is getting their supplies, the fact that, Indigo and SpiceJet are adding Bombardiers and ATRs will also suggest that yes, while your absolute number, may look a little tepid, you're also looking at the fact that they are connecting more and more regions, which should gradually start converting into businesses in times to come. So I think I'm not really worried much about the growth factor as such. For me, I think what really needs to be seen at this point is the fact that these yields have improved courtesy because now nobody is really playing dirty and they are all here realizing that if they have to survive the long-term gain, they have to be courteous to each other and make margins. So unless one of these players decides to sell below cost, and that is a time when you start seeing the whole industry getting disrupted again with challenges. I think if all of them have collectively decided, so while I'm not really saying that they've come together, but the fact that they're not killing each other on price gives everybody a chance to make money once they sort their own individual issues. So I am pretty positive on the fact that the Indian aviation is in a very decent scenario, and the guys have enough advantage if they can sort their issues in time.
The only thing out here is that the largest player right now doesn't have to play the price war game, right? Simply because the Jet Airways, with the quantum of planes getting grounded, is virtually ceding that space in any fashion whatsoever, in any ways whatsoever. Air India is not strictly the competition that it used to be. So the price war game is probably not the game that Indigo needs to play right now. And therefore, maybe that's why that is not being witnessed currently. Kinjal, the question though is that from where we are right now, within the number of aviation companies available, which ones fundamentally look poised for market share gain, profitable market share gain over the course of the next 2 or 3 years? Have you guys done some study and some prediction around that?
We actually track industry as such, and we do ratings of some of the companies, but we do not usually comment on in company specifics. So in terms of overall industry, I can just throw some highlight.
Sure.
So in terms of market share gains, again, it is a question of whether how many of your aircrafts are you deploying on the domestic routes or international routes. So I mean, if a company does have significant number of aircraft and it starts deploying more on international routes, it would start losing market share on the domestic route. That doesn't mean that it is not performing well on the domestic routes. So in the past, we have seen like Jet Airways deploying more on the international routes, and that's why it started losing market share on the domestic routes. So it's a question of how you plan your capacities, how you deploy your aircraft on domestic or international routes. And like I said, profitable market share or profitable growth would happen only once the pricing power for the industry as a whole improves and the company are able to improve the yield such that the increase in cost can be easily passed on to the flyers.
Just want to bring in the on that point, and the question that I asked Mayur is, while obviously he is of the opinion that there's going to be no price wars as such, there are going to be a sanity in prices. Right. How much more importance will you give to plane load, passenger load factor versus per seat increment of returns? So you may have a low-cost airline, right, but they're going to charge you for everything. They're going to make your luggage chargeable, any check-in baggage chargeable, the food is anyways chargeable. Small things, everything is going to have a price tag.
Right.
And that could be the way to actually tip the balance in your favor.
Right. In fact, if you see most of the international airlines and their balance sheets, these ancillary revenues that we talk about, revenues other than the fares on the normal seats, those have been comprising more than 10 to 15% of their total revenues. And in India, that still comprises less than 10% of the revenues. So if you were to see the global benchmarks, then yes, there is a scope for increasing those ancillary revenues. And I think that's where the Indian airlines are moving towards, because of the inability to increase the fares. I think they are charging now on these ancillary revenue streams and trying to earn more through them.
Let's see if that lasts. Mayur Milak, then I would pose that question to you. Within the 5 or 6 airlines operating currently, if you chart a 3-year horizon or a 5-year horizon for the space, and CAPA, ICRA, all of them have done that, the industry-wide outlook, you seem to be more bullish than them too. Which airline is poised to gain profitable market share over the course of the next 5?
Yeah, honestly, if you ask me, 5 years is a period that I never.
Let's say 3 years. Let's say 2 years.
As an analyst, we usually work on 1 year and 2 years.
Let's say 2 years.
But I think so if I have to look at who's gaining, yeah. So my point is that we've seen Indigo deliver consistent performance all these years. I think what really needs to be seen now is the fact that SpiceJet over the last 2 years had planned a lot of strategy, and now all of that has seemed to be executed. My personal belief is that you will start seeing structural benefits coming to SpiceJet through lower rentals, lower maintenance cost, better fuel efficient planes than what they were flying 2 years back. So honestly, if you ask me, if I really only compare SpiceJet's own performance with its performance 2 years back, I see a significant saving there. So my sense is that why we've always given a premium to Indigo for its consistent behavior and consistent performance, I think the delta seems to be much higher for SpiceJet in the times to come. So my personal bet would, if I have to rank it, I'd probably play a SpiceJet at this point in time, followed by Indigo, and then probably look at Jet Airways, looking at how really the balance sheet turns around.
Okay. So SpiceJet, and watch out for the market share delta out there, and that's the key thing from Mayur Milak. Just before we get into our next management, Kinjal, final thoughts. We've spoken about the positives and the upsides that come in because of the growth trajectory that the space is in. One key risk for the space. Any key risk for the space?
Key risk would be the ability to improve the yields in the context of the increasing costs. So important would be either you increase the yields or you achieve such kind of cost rationalizations that you can improve your profitability. Both of which are difficult.
Yeah. Both of which are difficult.
Right.
Okay. Well, let's see. So it's a risk that is there, but difficult to see how aviation companies comb through that and come out trumps. I think well, remains a fluid space, difficult to quite pencil in what would happen with certainty. But appreciate us making this attempt. Kinjal, Mayur, thank you so much for joining in today and giving us your perspectives. Let's see what time will tell. But both ICRA, CAPA, and I think everybody else fairly sanguine about the growth prospects for the industry at large for the next couple of years at least. I don't see a number lower than 14% from any of the people who track this space very, very closely on the growth front.